Hi everyone, in this video we'll be going over A-Level Accounting 2023 May-June Paper 2-1 question number 4. So paper 2 consists of 4 questions, 2 of them will be of 30 marks and 2 of them will be of 15 marks, and the total time limit for this paper will be 1 hour and 45 minutes. And since question number 4 is of 30 marks, ideally you should be spending about 35 minutes in order to complete this question, and in this video as well we will be attempting to solve this question under 35 minutes. So without any further delay, let's get started. D Limited has 2 production departments and 2 service departments at one of its factories where absorption costing is used, and some forecast factory overheads have already been allocated and apportioned as follows. So we're given the factory overheads for 2 of our production departments, cutting and assembly, and 2 of our service departments, maintenance and canteen. Then the following forecast factory overheads are still to be apportioned. So we still need to apportion the depreciation of machinery and power between our 4 different departments. Then canteen department overheads should be reapportioned on the basis of the number of employees. Maintenance department overheads should be reapportioned on the basis of the number of machines in production departments. We're also given the following data, which consists of the machinery at carrying value, number of machines which will be required in order to reapportion our maintenance department overheads. Then we're given kilowatt hours, number of employees which will be required in order to reapportion the canteen department overheads. Then we're also given budgeted machine hours as well as budgeted direct labor hours. Alright, now for the first part of this question, we need to complete the following table to show the apportionment of factory overheads and the reapportionment of service department overheads. The first one that we need to apportion is going to be depreciation of machinery. Now we need to figure out a suitable basis in order to apportion this depreciation of machinery among our 4 different departments. Since we're talking about depreciation of machinery, the most appropriate basis of apportionment would be either the cost of the machinery or net book value or the carrying value of machinery. And we're given the machinery at carrying value right here. So this will be our basis. Now, the first thing that we need to do is to figure out the total of machinery at carrying value for all 4 departments. So that is just going to be 90,000 plus 66,000 plus 18,000 plus 6,000, which results in 180,000. Now, we're given the total of depreciation of machinery to be 48,000. So let's figure it out for our cutting department. We start with our total of 48,000. And out of the total machinery value of 180,000, 90,000 belongs to cutting department. So we're just going to utilize this fraction. So that will be times 90,000 out of the total of 180,000. And this gives the depreciation of machinery towards our cutting department to have the value of 24,000. We now repeat the same process for the remaining 3 departments. So for assembly, again, we start with a total of 48,000. And out of 180,000, 66,000 belongs to assembly. So that's 66,000 divided by 180,000, which results in the depreciation of machinery towards assembly department to have the value of 17,600. Then for maintenance department, we again start with our total of 48,000. And 18,000 out of 180,000 belongs towards this department. So that's just going to be 18,000 divided by 180,000. Which results in the depreciation of machinery towards maintenance department to have the value of 4,800. Now for canteen department, that's going to be 48,000 multiplied by 6,000 divided by 180,000. And this results in the value of 1,600. So let's write down these 4 values in our table below. For cutting, it was 24. For assembly, we figured it out to be 17,600. For maintenance, it was 4,800. And for canteen, it was 1,600. Now we need to apportion power. Again, we need to figure out an appropriate basis. So for power, the most appropriate one would be the uses of electricity, which is given right here in kilowatt hours. Again, the first thing that we need to do is figure out the total of kilowatt hours. So that's going to be 1,800 plus 1,500 plus 100 plus 200. Which results in 3,600, and we're given the total power to be 40,200. Now towards our cutting department, that will be 40,200 multiplied by 1,800 kilowatt hours out of the total of 3,600 belongs to cutting department. So we're just going to utilize that fraction. So 1,800 divided by 3,600, and this results in the apportionment of power towards cutting department to have the value of 20,100. Now for assembly department, that will be 40,200 multiplied by 1,500 divided by the total. And this results in the value of 16,750. Now for maintenance department, again that will be 40,200 multiplied by 100 out of the total of 3,600. And this results in the value of 1,116.67. For our ease of calculation, we can just round it off to 1,117. Then for canteen department, that will be 40,200 times 200 divided by the total of 3,600, and this results in the value of 2,233.33. Again, for the ease of our calculation, we can just round it off to 2,233. Okay, let's write down these four values. So for power, for cutting department, we figured it out to be 20,100. For assembly, it was 16,750. For maintenance, it was 1,117. And for canteen, it was 2,233. Now we need to figure out the total overheads. And total overheads is just going to be the sum of factory overheads, depreciation of machinery, and power. So for cutting department, that will be 223,480 plus 24,000 plus 20,100, which results in 267,580. For assembly department, that's going to be 217,980 plus 17,600 plus 16,750, which results in 252,330. Now for maintenance, that's going to be 45,270 plus 4,800 plus 1,117, which results in 51,187. And for canteen, that will be 36,260 plus 1,600 plus 2,233, which results in 40,093. Now we need to reapportion. So firstly, we need to reapportion the overheads for our canteen department among the three departments, cutting, assembly, and maintenance. And we were given the basis of apportionment, a basis of reapportionment as well. It was the number of employees. Number of employees is given right here. Again, the first thing that we need to do would be to figure out the total. So that is just going to be 27 plus 18 plus 5, which is 50. And the total overhead for canteen is 40,093. So the reapportionment of canteen overheads towards our cutting department is just going to be 40,093 multiplied by 27 employees out of the total of 50 belongs to our cutting department. So we're just going to utilize this fraction times 27 by 50, which results in the reapportionment towards cutting department to have the value of 21,650.22. For the ease of our calculation, we can just round it off as 21,650. Now for assembly department, that's going to be 40,093 multiplied by 18 divided by 50. This results in the value of 14,433.48. Again, for the ease of our calculation, we can just round it off as 14,434. Now for maintenance department, that's going to be 40,093 multiplied by 5 out of 50. And this results in the value of 4,009.3. Again, we can round it off, so that will be 4,009. Let's write down these three amounts. So for cutting department, we figured it out to be 21,650. For assembly, it was 14,434. And for our maintenance, it was 4,009. Now, since we're reapportioning this amount towards the three different departments, now we need to remove this overhead from the canteen department. So we're just going to subtract this exact same amount. And then we're going to figure out the subtotal. And the subtotal is just going to be the sum of total overheads and reapportionment. So for cutting department, that will be 267,580 plus 21,650, which results in 289,230. For assembly department, that will be 252,330 plus 14,434, which results in 266,764. For maintenance, that will be 51,187 plus 4,009, which results in 55,196. And for canteen, the total is just going to be 0 now. Now there is next reapportionment, and this is just going to be the reapportionment of maintenance department towards our two production departments. Again, we were given the basis of reapportionment above, and the basis was number of machines in production departments. And number of machines is given right here. So the first step would be to figure out its total. That's 43 plus 27, which results in 70. And the total overhead for our maintenance department is just 55,196. Now let's figure out its reapportionment towards cutting department. We start with the total of 55,196, and out of the total of 70 machines, 43 belongs to cutting department. So that's times 43 out of 70. And this results in the value of 33,906.11. If you round it off, that will be 33,906. Now for assembly department, that will be 55,196 multiplied by 27 out of 70. And this results in the value of 21,289.89. If you round it off, we can write it as 21,290. Now let's write down these two amounts. So for cutting department, we figured it out to be 33,906, and for assembly department, it was 21,290. Now since we are reapportioning this amount towards our two production departments, now we just need to subtract this exact same amount from the maintenance department. So that's 55,196. Now we need to figure out our total overheads, and total overheads is just going to be the sum of our subtotal and the reapportionment. For cutting department, that will be 289,230 plus 33,906, which results in 323,136. For assembly, that's 266,764 plus 21,290, which results in 288,054. And for maintenance department, it's just going to be 0. Alright, this concludes the first part of this question. We can now move towards the second one. We now need to calculate to 2 decimal places and overhead absorption rate for each production department using a suitable basis. Okay, let's figure it out for our cutting department. So for overhead absorption rate, we just divide our total overhead by the maximum of our budgeted direct labor hours or the budgeted machine hours. So we have the total overhead for cutting department to be 323,136. Now we just need to compare the budgeted direct labor hour and budgeted machine hours for the cutting department, and it's given right here. So we can see that the machine hour is 40,000 and direct labor hours is 23,000. Clearly machine hour is greater, so we just use machine hours as our basis in order to figure out the overhead absorption rate for the cutting department. And it just means that we need to divide the total overhead by the budgeted machine hours. So that's 40,000, and this results in an overhead absorption rate of 8.08. And we also need to clearly state our basis, that is per machine hour. Now we repeat the same process for our assembly department. We have our total overhead to be 288,054. Now we need to compare the machine hour and direct labor hour. That's 33,500 and 62,500. Clearly, direct labor hours is greater than machine hours for our assembly department, so that will be our basis. That was 62,500, which results in an overhead absorption rate to be 4.61, and the basis is per direct labor hour. This concludes the second part. We can now move towards the third one. We're given additional information. We're given the direct labor rate per hour, machine hours per unit, labor hours per unit, and the direct materials cost 6.95 per unit. Selling prices are set to achieve a profit margin of 25%, and a customer has placed an order for 40 units. Now we just need to calculate the selling price to be quoted for this order of 40 units. Before figuring out our selling price, we need to figure out the cost, and then we'll have to figure out the profit, and the sum of cost and profit will give our selling price. Okay, so the first step would be to figure out our total cost for 40 units. Let's create a statement. We can first start with direct material because we are given the cost per unit right here. So the total direct material cost is just going to be the per unit rate of 6.95 multiplied by the number of units, which is given to be 40. This results in the value of 278. Now we can move towards our direct labor. Okay, and for direct labor, we need to figure out a different rate for cutting department and assembly department and figure out its total. So for cutting department, we are given the direct labor rate per hour to be 10.9. And remember that this is the rate per hour, which means that we need to multiply the labor hours per unit required for cutting department. And the labor hours per unit is given right here, which means that we also need to multiply this rate of 10.9 by 3. Now this will give our direct labor rate per unit. Now we still need to multiply it by the total number of units in order to get our total direct labor expense for the cutting department. So we're just going to multiply it by 40. Now we repeat the same process for assembly department. So we start with our direct labor rate per hour of 8.20. Then we need to multiply it by the labor hours per unit in order to figure out the direct labor cost per unit. And it's given to be 4. Then we multiply it by the number of units so that we get the total direct labor expense for assembly department. And this gives the total of direct labor to be 2,620. Alright, now we can move towards our overheads. In order to figure out overheads, we're just going to utilize our overhead absorption rate that we calculated in the second part. So for cutting department, we figured it out to be 8.08 and the basis were machine hour. So we have the rate of 8.08. And since the basis was machine hour, we just need to multiply it by machine hours per unit, which is given to be 8. And this will get our overhead per unit. So in order to figure out the total overhead, we just need to multiply it by the total number of units, which is 40 in this case. And this gives the overhead for cutting department to have the value of 2,585.60. Now we just repeat the same process for assembly department. The overhead absorption rate, we calculated it to be 4.61 and the basis was direct labor hour. So the rate was 4.61. And since the basis was direct labor hour, we just need to multiply it by the labor hours per unit, which is going to be 4. And this will give our overhead per unit. Now, in order to figure out the total overhead, we still need to multiply it by the total number of units. And this gives the total overhead for assembly department to have the value of 737.6. Okay, that's all of our cost. Now, if we add these 4 figures together, we get the total cost incurred while preparing 40 units. That's 278 plus 2,620 plus 2,585.60 plus 737.60, which results in 6,221.20. Now the next step would be to add profit to the cost so that we can figure out the total selling price. And the criteria that we were given is that selling price are set to achieve a profit margin of 25%. So a profit margin of 25% just means that 25% of the selling price is going to be profit and the remaining 75% of selling price is going to be the cost. Since we already have the total cost, we can just figure out the selling price using this equation. So what you just wrote down is that 75% of selling price is cost. So we can write it down as 0.75. We can multiply it by the selling price. And we already calculated the total cost to be 6,221.20. Now the selling price is just going to be 6,221.20 divided by 0.75, which results in the value of 8,294.93. So that will be our selling price. Now, in order to figure out the profit, we just know that cost plus profit equals to selling price. We have the cost to be 6,221.20 plus profit. We figure out the selling price to be 8,294.93. This just means that our profit will be 8,294.93 minus 6,221.20, which results in the profit to have the value of 2,073.73. So it's not really necessary to figure out the profit because we are only told to calculate the selling price, and we already figured out the selling price without having to calculate the profit. But I'm just showing you a way to calculate the profit as well. Alright, this concludes the third part of this question. We can now move towards the fourth one. We need to state two causes of underabsorption of overheads. So this is pretty simple. We have two criteria for underabsorption. The first one is on our basis of overheads. For overheads, we require our actual overheads to be greater than the budgeted overheads. So actual overheads exceed budgeted overheads. And the second criteria is based on the production level, and it's going to be the exact opposite, which means that our actual production should be less than the budgeted production. So actual production is less than budgeted production. This concludes the fourth part. We can now move towards the next one. We're given additional information. At the other factory, a single product, product X, is currently being made and marginal costing is used at that factory. The following information is available. We're given the selling price per unit, contribution per unit, direct labor, fixed cost, factory capacity, and current production level. All units produced are sold. For the fifth part, we need to calculate the profit made each year from product X. Alright. Okay, first of all, let's calculate our number of units. We're given factory capacity to be 28,000 labor hours per year, but the current production level is 80% of factory capacity. So let's figure out 80% of factory capacity. That is just going to be 80% of 28,000 labor hours. That's 0.80 multiplied by 28,000. So the number of labor hours utilized currently is just going to be 22,400. Now based on this, we need to figure out the number of units. Let's take a look at direct labor. We are told that 2.5 hours of direct labor is required for 1 unit. So 2.5 hours is required for 1 unit. For 1 hour, we can prepare 1 by 2.5 units. And we already calculated that we have 22,400 labor hours. So for 22,400 hours, we can prepare 1 by 2.5 multiplied by 22,400 units. And this is just going to be 8,960 units. Okay, that's the number of units. Now we're given the contribution per unit, which means that in order to figure out the total contribution, we can just multiply it to the number of units that we just figured out. Okay, in order to figure out the profit, let's create a statement. We'll start with total contribution. And this is just going to be the contribution per unit of 13 multiplied by the number of units, 8,960. This results in the total contribution to be 116,480. Now we just need to subtract all of our fixed costs. And we're given fixed costs right here. That's 96,000. Now we get profit. And the profit is just going to be 116,480 minus 96,000, which results in 20,480. Alright, this concludes the fifth part of this question. Now we can move towards the sixth one. Okay, before that, we're given additional information, and the directors plan to make a new product, product Y, at this factory at the request of an important customer, and the following details are available. The factory will be able to operate at full capacity. So the previous full capacity was 20,000 labor hours per year, and all units produced will be sold. Product Y will have a selling price of 64 per unit, so we're given the selling price, and a contribution of 8 per unit. Product Y will require direct labor at 10 per hour for 1.5 hours per unit. That's the direct labor cost. The customer requires 10,000 units of product Y each year. The customer will only accept this quantity each year. So we cannot really change the number of units for product Y. Then in order to complete the customer's order, production of product X will be reduced. Okay, let's evaluate this information. Previously, we have the total labor hours to be 28,000, and we are told that the factory will now operate at full capacity. So it will be utilizing all 28,000 labor hours. And we're also told that the customer requires 10,000 units of product Y. So in order to produce 10,000 units, let's figure out how many direct labor hours should be invested. We are told that for product Y, 1.5 hours of direct labor is required per unit. Alright, so for 1 unit, we require 1.5 hours, and we are told that we require at least 10,000 units. So for 10,000 units, we require 1.5 times 10,000 hours, which results in 15,000 hours. So out of 28,000, product Y will get 15,000 labor hours. Now the remaining is just going to be 28,000 minus 15,000, which is 13,000. Now we can utilize these 13,000 direct labor hours in order to produce product X. Again, let's figure out the number of units for X. We are already told that 2.5 hours will be required per unit, and we have 13,000 hours. So 2.5 hours is required for 1 unit. So 1 hour, we can prepare 1 by 2.5 units, and we're given 13,000 hours. So in 13,000 hours, we can prepare 1 by 2.5 multiplied by 13,000 units of X. That is just going to be 5,200 units. Okay, so we'll be producing 5,200 units of product X and 10,000 units of product Y. Now some new machinery will be required, costing 36,000, and machinery is depreciated by 20% per annum. So let's figure out the depreciation charge. That is just going to be cost, which is 36,000, multiplied by the rate of 20%, which results in 7,200. And a loan of 20,000 at 5% per annum interest will be required to finance the purchase of the new machinery. Again, let's figure out the interest on loan. That is just going to be the loan amount of 20,000 multiplied by the rate of interest 5%, which results in 1,000. Now these two expense, we cannot really figure it out per unit, which means that these will be added to our fixed costs. So let's figure out the total fixed cost now. Previously, we had 96,000 per annum. So we'll start with that amount. We have 96,000, and then we'll add our depreciation of 7,200 as well as the interest on loan of 1,000, which results in our total fixed cost to have the value of 104,200. Okay, that's all of the information. Now let's move towards the sixth part. We need to calculate total profit from both products, which will be made in the first year if this plan is put into operation. Again, let's create a statement so we can figure out the contribution. And we need to figure it out for two different products. So we have X and Y. Alright, for X, we figured out that the number of units will be 5,200, and we can just multiply it by the contribution per unit, which was already given to be 13. So that will be 13 multiplied by 5,200, which results in the total contribution for product X to be 67,600. Now we repeat the same process for Y. We're given the contribution of 8 per unit for Y, and the total units is going to be 10,000. So we just need to multiply these two together. That will be 8 multiplied by 10,000, which results in 80,000. Now, the next step would be to subtract the fixed costs. And we've also figured out the total fixed cost to be 104,200. After this, we get the profit or loss. So that's just going to be 67,600 plus 80,000 minus 104,200, which results in 43,400. And this will be our total profit. Alright, this concludes the sixth part. We can now move towards the seventh one. We now need to advise the directors whether this plan should be put into operation. We need to justify our answer by considering both financial as well as non-financial factors. And we're given 7 marks. So we need to write down at least 6 justifications. So the first thing that we can write down is by comparing our profit. So the new total profit is 43,400. And previously the profit was 20,480. So it's nearly double in amount after inclusion of product Y. So we can just write down that the annual profit doubles after the production of product Y then we can also say that the factory will be operating at full capacity. So let's write it down. And our capacity was given in terms of direct labor hours. And if we're utilizing full capacity, this just means that all the direct labor will be utilized. So there is no any risk of losing skilled labor, which means that all direct labor is utilized. So there is no risk of losing skilled labor. And if you take a look above for product Y, we are told that product Y is being produced at the request of an important customer. So there's only really one customer for product Y, and we do not really know whether or not the order from this customer will be repeated in the future. So we can question that. Will the order from this important customer be repeated in the future? The second thing that we can write down is the reduction in the number of units of product X, because now we'll be producing 5,200 units, but previously we had been producing 8,960 units. So will there be any customer reduction due to the reduction in number of units for our original product? We can write that down as well. Will there be customer reduction due to decrease in the number of units produced for product X? The next thing that we can talk about is the loan, because we're told that a loan of 20,000 will be required in order to finance the purchase of new machinery. And we still do not know whether or not the company will be able to obtain this loan. So will the company be able to obtain the loan? And this loan is required in order to finance the purchase of new machinery. So if it's a new machinery, we're not really sure whether or not the existing labor force will require any sort of new training, and that will result in an additional cost. So we need to consider that factor as well. So will there be any additional training costs? Alright, we have written down 6 justifications, and now based on this we need to advise the directors whether or not this plan should be put in operation. So personally I would suggest the directors not to put this plan into operation, because remember that there is an increment in the fixed cost due to the production of the product Y, and we're taking out a new loan as well as we're purchasing new machinery. So if this customer does not repeat the order in the future, then the fixed cost will be increased for the next few years. And if our costs are increased, then it means that our profit will fall. So the profit will also fall in the long term. That's why I'm just going to suggest the directors that this plan should not be put into action. So the decision is that the directors should not put this plan into operation, because if the customer does not repeat this order in the future, then the company will have to bear additional fixed costs for the next few years, which will result in a reduction of profit in the long run. Alright, that's all for this part as well as the entire question. So if you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to this channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.